Good evening, everyone. So I'm sorry that I forgot to make a video on those bonus questions, question 21 to 25. So somehow the solution I have is not a full solution. So I'm going to quickly go through these 5 questions, okay, about the calculations. So hopefully you'll find it's going to be helpful. Okay, so the first question, question 21. Trito Construction Company entered into a contract to build a condo building for 1.8 million dollar. Construction commenced on July 1st, 2020, with a planned completion date of December 31st, 2022. A summary of the related accounting information is provided below. If you have the 3 years accounting information. So the first question is asking how much gross profit would be recognized in 2022, okay, if Trello used the completed contract method, okay? So completed contract method, remember the ISB, okay? For ISB, they have the option, can either use completed contract method or percentage of completion method, right? But for efforts, under efforts, the only option is the use of the percentage of completion method. Okay? So here they are asking about completed contract method. Okay. So what happened is you want to make sure that this is not at any point of the at any point of the reporting dates over the period of construction, whether this contract might have been considered as the onerous contract. So to figure that out, okay, so you want to consider, okay, let's see, you want to consider. So in 2020, okay, in 2020, what is the total cost in 2020? So the cost incurred during 2020 is 400,000. Additional cost to complete at the year end is 1.2 million. So the total expected cost for 2020, that's going to be 1.2 plus 400, so the 1.6 million. Right, so that's under 1.8 million price. This is a price. Okay? The price is 1.8 million. So that's good. That's for 2020. What about 2021? So for 2021, okay, so we have total cost 400, 21, 500. So the actual cost up to 2021 is 900, and you need additional 600. Okay, so your total cost then will be, that's gonna be 4 plus 5 plus 6. Okay, that's 1.5 million for 2021. Right, so this is also under 1.8 million. Okay, so this is not an owner's contract. Okay, this is not an owner's contract. Even in 2022, okay, 2022, the total cost is only, okay, 2022, 650,000. Okay, so the actual cost, total cost, that's gonna be okay. So I'm gonna change the color. Okay, color actually was blue. Sorry. So the cost will be 400. Okay, 400 plus 500 plus 650. So that's going to be 1.55. Okay, 1.55. So you can see that at the end of each of the 3 years, the total expected cost is always under $1.8 million. Therefore, this is not an owner's contract, right? If it's not an owner's contract, then, okay, if you use completed contract method, you are going to recognize, okay, you are going to recognize the gross profit until the completion, until 2022, okay? So in 2022, you are going to recognize the entire amount of the gross profit of the contract, okay? So that's going to be, okay, 1.8 million, that's your price, minus your actual total cost, 1.55. So the answer is, so you're going to use 1.8, 1.8, this is million, that's your price, minus your total actual cost, which you figured out at the end of 2022, that is 1.55 million, okay? So this number comes from this 3, okay? That's the total actual cost for this project. So your gross profit, okay, is 250,000, and this will be recognized in 2022 because this is a completed contract method. The answer is B. Okay, the answer is B. Okay, I hope I made this clear. So you have to be careful here. Okay, you can't just jump to last year, right, and figure out what's the total cost and what is the gross profit, right? Because if in 2021, if at the end of 2021, it was an onerous contract, so you have recognized a loss, right, in 2021. So in 2022, when you reverse the loss, you are going to recognize more gross profit. Okay, so you have to analyze first whether this contract, at what time point it is an owner's contract. If it's not owner's contract, then it's simple, right? Just figure out what's the total price, what is the total actual cost. The difference is the gross profit. Be recognized only at the end of the year, right? Because they are using the completion contract method. Okay, so that's the first question. Okay, question 2022. Nicholas Construction Company entered into a contract to build a shopping complex for $1.9 million. Construction commenced on July 1st, 2020, with applying the completion date of December 31st, 2022. A summary of related accounting information is provided below. Okay. How much would the balance in accounts receivable be on the balance sheet of NCC at the end of 2022? So at the end of the 2022, what is the AR balance, right? So that's kind of interesting. That's easy, right? So basically, you think about it. By the end of 2022, what's the total amount of AR I should have recorded? Okay, so that's the end of the project, right? You should have charged the full amount, right, of the contract price, which is 1.9, right? So total AR, okay, at the end of the contract should be 1.9 million, right? That's how much the fixed price is, right? And how much you have collected. How much you have collected? You have collected 500 in the first year, 310 second year, and 800 on the third year. So in total, you have collected in total. So that's for 1.61 million, right? 81, yeah, 1.61 million. That's how much you collected. And you should collected 1.9. The difference should be the outstanding balance for AR. The difference is 290. Okay. So you should collected in total 1.9. So far you have collected 1.61. So you still have 290,000. That's going to be your AR balance. So the answer for this question, is going to be So number C. Okay, the answer to the second question is going to be number C, 290,000. Number 3 question. Nova Construction Company entered into a contract to build a school for $1.8 million. Construction commenced on May 1st, 2020, with a planned completion of December 31st, 2022. The summary of the related accounting information is provided below. Okay? How much gross profit would be recognized in fiscal 2020 if the company used percentage of completion method? Okay, they're asking about the 2020. Okay, so first, let's calculate the percentage of completion. I'm going to use cost approach. Okay, I'm going to cost approach. So I'm using total cost incurred to date. Okay, that's the 400,000. Okay, and total expected cost would be 400 plus 400,000 plus 1.2 million. In total cost is 1.6 million. Okay, and the total cost incurred to date is 400. Now I have this is so big. I have 400,000 divided by 1.6 million. So that should be 25%. Okay. And what is my gross profit at the end of 2020? So gross profit equals price 1.8, expected total cost 1.6. That's $2 million. 2 million. Sorry, 0.2 million gross profit, and that's going to be times 25%. Okay, so 25%. 25% times 0.2 million. 0.2 million is 200,000. That equals 50,000. Okay. So it should be 25% times 200,000. The answer is A, 50,000. So I hope this makes sense. 50,000. All right, 50,000. Okay, so that's question 23. Okay, 24. Question 24. Okay, question 24. Early in 2021, Forest Ltd. signed a contract to construct a warehouse. Forest management estimated the gross profit on the contract to be $740,000, as indicated by the following. Contract price $3.5 million, estimated cost $2.76 million, gross profit $740,000. At the end of 2021, the status of work on the contract was follow. Cost incurred to date 1.35, estimated cost to complete 1.65. How much revenue can be recognized on this contract for 2021? Assuming the company use percentage of completion basis for a long-term contract. Okay. Okay, so how much revenue can be recognized? So first, you want to calculate percentage of completion. Okay, percentage of completion, that's going to be so for 2021, at the end of the 2021, the percentage of completion is 1.5 divided by 1.35 plus 1.65. So this is going to equal to 1.35 divided by 3.0. Okay, so that's going to be, how much is that? Okay, so for 45%, yeah, 45%. So that's the completion percentage of completion. Okay, 45%. So the contract price. Okay, contract price. They are asking about how much revenue on this contract. Okay, for 2021. So this is going to be 3.5 million. 3.5 million times 45%. So it's going to be slightly under. This one has to be smaller than times 50%, right? 3.7. Okay, so that's 1.75. Okay, no. So what is this number? Okay. So that equals 3%. If it's 3%, 35. If it's a 13, okay, 3%, 1.35 plus half. So that's going to be, okay, so this together, 1.575. Okay, so 3.5 million times 45% is going to be 1.575, okay, million. So the answer is C, 1.575. Okay, answer is C. Last question. How is revenue recognized on a cost plus 7 contract? This is the cost plus contract, right? Remember, for cost plus contract, revenue equals cost plus the profit margin. So revenue equal to the cost plus 7% profit will be recorded each year. The answer is D. Okay, this is very simple. I don't have much to say about it. Okay, that's it. And good luck with tomorrow's exam. And all the best. Have a good night.